Hey, how's it going, everybody? Welcome to another edition of the Swing Trade Newsletter. Anmol here. Hope you guys doing all right. And let's get to it. Let's get straight down into it. So, the market, has been pretty interesting, but overall, the theme has been the same, right? We just keep floating higher, which is fine. Nothing wrong with the market that continues to go higher as long as we get pullbacks, right? Like as I said, remember last time I did the newsletter, I said, "Hey, I'm a little bit concerned. We're just floating straight up," and then we got that decline, which we talked about, and now we're back up. So once we get little declines like that, it's okay. The market can continue to go higher for a little bit. The only time it gets concerning is when it just keeps floating up. So, even though I think the market is still extended to the upside, when you take a look at the higher time frames like the weekly chart and the monthly chart, they're still extended when you take a look at the higher time frames. But as you will see here on the weekly chart, it's fine, right? It becomes better when you get these little pullbacks, right? Because when you get multiple green bars in a row, that's when we have to be concerned. But the fact that we got these pullbacks, I think the market might be ready to go higher. We'll see how next week reacts. The levels for next week are pretty clear. If we take out the low from 5th Feb, which is $330, so if you take out 330, then you might actually pull back to like 327-ish, and then we might continue higher, but under 330 might open the door down to like 327-ish. At the same time, levels to the upside are pretty clear, which is the 6th February's high, or even Friday's high of about 334. If you get above 334, the next targets I see for the markets to head up into is 339 to 340 is where the market might head up into before we see another pullback. So for next week, the levels are pretty simple here on the market. That if you take out these highs right over here, the next target for the market to go up into is 339. If you take out these right over here, then we might get a little pullback. It'll be interesting to see what the market does, because sometimes what happens is when you get a deep pullback like this, right, the sooner the market does this, the better, right? If the market doesn't do that, what ends up happening a lot of times is we get an M-top pattern where you get a little M-top, and if you get back below 330, then the M-top could actually lead to further downside. So what's going to be key is to watch 5th Feb's low. That's going to be the key here on the market. But again, as swing traders, it doesn't really matter. That's the thing where you have to be concerned. If you're an investor, right, investing is a little bit harder, right? Investing is also a long-term game. Like if you're an investor in the markets, right, you don't have to be concerned about what's going to happen in the next week or next month. This is where I want to make it clear. See, because as an investor, you have a 5-10 year plus horizon. So you don't need to be concerned about the market's going to do this week, next month, or even this year, because 1 year of decline doesn't really matter, right? Because if you're an investor, you have a 5-10 year horizon, and the market eventually will still continue to go higher. So that's something you don't need to worry about as far when it comes to investing, right? So here's a few different type of investors, and I want to kind of help you guys out here. So first, you got to decide. I mean, not decide because it's a fact. You figure out what your age group is, right? So now, if you're in your 20s, if you're in your 30s, even if you're in your 40s, or even if you're in your 50s, right? You got time, right? Again, nobody really knows how much time we have, but the average lifespan expectancy these days is close to like 80 plus. So if you're a 40-year-old, 50-year-old, 30-year-old, doesn't really matter, because we have time. We have the benefit of time. Meaning, let's say you invest into the markets today, right? Which is, in my opinion, not a good time, but let's say you invest in the markets today. And let's say you go through 2 years of bear market. Market just keeps coming down, coming down, coming down. Yes, in theory, on paper, you're going to be down X amount of money. But as an investor, you got time, right? Market will rebound again for sure in the next 5 years, 10 years. So any losses that you might have gained, you're going to recoup it. So that's the benefit of being an investor in your 30s, 40s, or 50s, or even 60s, these days. So you have the benefit of time, that you have 5-10 years for the market to come back up, and eventually you'll get your return. So that's fine, right? Historically, we've had 2 or 3 or 4 crashes, but if you take out the average, market has still given you 8 to 10% on an average. So you're fine right now. If you are in somebody who is in his 60s, 70s, right, or maybe late 50s, and you're like, you know what, I'm nearing retirement. Now, see, if you're nearing retirement, now that's a different ball game, because you don't have the benefit of time. right? B, you don't have the income that you might be getting because you're retiring. So now you need the money to live off, and you also need the money for emergency expenses, right? Medical bills or any unforeseen circumstance that might come in. So now, if you are somebody who's nearing retirement, now you have to be obviously concerned as an investor because you don't have the benefit of time, right? Because if you're retiring, let's say you need the money in 2 years, 3 years, and so you don't have the benefit of the time to wait for the market to recover in like 5, 10 years. So that's the beauty about investing in your 20s, 30s, and 40s, and even 50s, because you have the benefit of time to get that money back. But if somebody who's in your 50s and 60s and 70s, you don't have the benefits. So you have to be more conservative. So that's why I tell people, because if you're in your 20s and 30s, don't worry, be aggressive, right? Be aggressive, and you should be living below your means and investing everything you have, right? If you have in your 20s, 30s, and 40s, don't worry about buying a house. Don't worry about buying a car. Put all that money in the market because you have the benefit of the time. And guess what? In 10 years' time, you're going to more than double your money, right? More than that, like triple your money by that time. As a compounding basis, you're going to make even more. So, you got to be really aggressive when you're in your 20s, 30s, and 40s. Now, when you get to your 50s, now you start slow down, be a little bit conservative. When you start getting your 60s, you now don't want to have too much money in the market. You want to have bonds and things of that nature. And that's where swing trading, I like swing trading because swing trading for me is actually a form of investing. So rather than investing money in the market and just waiting for a return, right? I like to create my return every month, right? Every quarter. So I don't want to see what my return is at the end of the year because if the market will give you at the end of the year, if you take a 10-year average, it'll give you 8 to 10%. I don't want to wait for that, right? I want to swing trade my money because I can make more than that, right? I can make more than what the market can give me. I mean, we've done that for many, many years, right? Like 2015, when I used to run the newsletter, we made like 50%. 2016, when I ran the newsletter, we made like 40 something percent. 2017, when we did the newsletter, we made like about, just a little bit shy of 40%, 38% or something like that. And 2018, again, if 2018, if you did that, if you were doing, 1% risk, you made about 16%. If you did 2% risk, you made about 30%. And this year, my goal is that I think this year we're going to get a lot of opportunity. I want to get like 50% or higher. And again, it depends on how much you're risking per trade, but that's my goal. So I can make more than that. So that's why I'm not a big fan of investing. I like to just move my money around. It's not a lot of work, right? Move your money around, keep the money flowing, and you can sleep well at night because you don't have all your portfolio in a market. So even if a market crash happens, guess what? Guess what's going to happen? Well, our shorts are going to hit target and the longs are going to get stopped out. We're still going to end up making money. Or worst case scenario, let's say we're only long and the market crashes. Guess what? Worst case, they'll stop out. We'll lose 1 hour and we'll walk away. So that's the beauty about swing trading. That's why I like swing trading. And yeah, so that's my rant for today. Hope that little helps. So what do we go from here? Again, we just keep being nimble. We don't need to care too much about what the market's doing and stuff like that. We need to be nimble in our trades. And, this week was okay, not a great week of February. We were doing really well in January. At one point we were up close to 12% for January. If you were assuming you're risking 2% per trade, right? So the returns are still good, but obviously we had some chop because of the way the markets reacted. We had some good short positions that I think we did a good job taking some of them out here. But then this gap up day kind of ruined some of our shorts. And the longs are doing, okay. But the thing is that you need the market to put in some nice green days, right? Some green candles. And on those days is when your swing trades really, really, push to the upside. When you get these little bars, even though they're going up, they're not going up with some momentum, which is why the long trades were okay, but not not fantastic, so to speak. So again, let's take a look at here. So we'll, by the way, I made a few changes onto the spreadsheet, which you will notice. So one thing I've done is based on a popular request, I froze these top things. So as you scroll down now, right, these things on the top will stay at the top, right? Earlier, what was happening is like in the 2019 spreadsheet, you see when we scroll down, everything disappears. So now when you scroll down, the things will stay on the top. And another thing I've added here is you'll see the column right over here, right? This little column right there to the right-hand side, right over there. So that column will now show the pending trades, right? For example, hey, we're still waiting for this to trigger. We're still waiting for this to trigger. So what trades are pending will be also posted over here. Now, I'm not going to post the entry or, the stop loss or anything like that. Maybe I'll just add like, okay, MBIO long is a pending order, right? And JCI short is a pending order. So I'll add that. but I'm not going to add the numbers like entry and stop and target, just because those who are not members of the spread newsletter, maybe people are just looking at the spreadsheet to see our results and stuff like that. So obviously the trades will be only in your email newsletter, but I've added this column so at least you know what we're still waiting on. Now, I would still urge you to rely on the emails, right? So what you might want to do is, again, if you're on Gmail, sometimes the newsletter emails might land up in your promotions folder or your social folder. You want to make sure they land up in your inbox. You want to make sure you do that, and then you want to look for the emails for the up-to-date, accurate information, because I'm trading in the morning, right? So in the morning, I'm day trading stocks, I'm managing my swing trades, I'm managing my long-term trades. So I don't have the time in the morning, in the middle of the market, to update the spreadsheet, but I'm going to try my level best to update it every evening, right? So every night, every evening is when I'll update the spreadsheet, but the emails are always up to date. So you want to make sure you check the emails, right? Because in the middle of the day, let's say we close out a trade, I'm probably not going to update the spreadsheet until later in the day, right? So that's one thing you got to keep in mind. Another thing you also want to do is I'm adding the color here, right? So you'll see here what trades are open. So for example, I don't know, I'll add the color over here. Let's see, purple, right? So there you go. So purple will tell you which trades are open. So that way, when you're scrolling down, you'll see, okay, all these are closed trades. And then right over here, you'll see, okay, oh, these two trades are open. So that color will make it easier for you. So I'm going to add that, okay? So that's one thing we'll add on the color side. All right, let me make that white. Okay, so that's that. So again, so that's some spreadsheet changes. And again, feel free to let me know if you have any more suggestions. I'm not a spreadsheet expert, so this is the best I could, come up with. I think it's pretty handy. But anyway, so that's the market. As far as these swings, right now we still have this SDC trade open. We've already raised our stop loss on it, so we're not going to lose on it, right? We're going to make money on it. It's just a matter of how much money. So this is the trade we got into. I bought SDC long because this was a wedging pattern. And by the way, this was already a good trade for us. We traded this in January, if you remember. So in January, we bought it over here and we sold it right over there, right? So now it had another little triangle type pattern. So when it got above 14, I bought it back at 14, and it did a good job. As soon as we got in at $14, it almost went to 15. Right? Almost went to 15. So 15 is the resistance. That's where it needs to get above. So it went above to almost to 15, pulled back a little bit. Our hope, obviously, is that the next week it blows past 15, because my thinking is, if now it gets above 15, right, this is probably going to go straight to 16 or 17, and that's going to be our target. Our target on this trade is $17, and I think it could really get up there literally in 1 or 2 days if it gets above 15 properly. So that's what we're going to wait for. I'm already in it. I have, however, raised my stop loss. So my stop loss is now right at Friday's low. So Friday's low is $14.10. I'm going to place my stop loss at $14.10. Okay? So my stop loss is at $14.10, and I wanted to get above it on Monday. So that's one trade that we're currently in. Another trade that I'm currently in is MNK. So MNK, we got into this trade as a buy setup. The stock was in a sideways pattern for a little bit, got above that sideways pattern, pulled back, moving averages, caught the price, and it started coming back up. So I bought it at $5. That's where we sent the alert. Our target is really $6.50, but if I get $6 next week, I might be tempted to either sell half my position, right? So I might be tempted around $6 to sell half my position, or at least raise my stop loss. But I'm hoping I can get $6.50 or $7 on this MNK. So from $5 entry, did a good job. It went as high as $5.49, but it couldn't get about $5.49. I have, however, gone ahead and raised my stop loss to $5.07, which is basically Friday's low. So I have now put my stop loss at $5.07, which is literally Friday's low. I want to see the stock get back above Friday's high on Monday. If that happens, then I think we should be getting our target on this trade. But I have raised my stop to $5.07. So again, we can't lose on this trade, which is a good thing. As far as the other stuff we did last week, Salt was a trade that stopped out for a loss. So I bought this stock called Salt, which is a pretty salty stock. It was down multiple bars in a row, right? Like red. It still is pretty down quite a lot. And we recently got a volume spike, a few days ago. two nice volume candles. So I thought, if it looks like it wants to kind of get back up there. It was an early entry in my opinion by me. I think I should have waited for it to take out those two candles high and then bought it. But I kind of sneaked in early. But again, it didn't work out. So this was a trade that I lost on SALT. Another one that we did is GE, which we got out of. Made a little bit over 1R on this trade. So GE was a great entry. I bought it at $12.57. Right on this day, I said, hey, let's put a limit order to buy it at 12.57. It pulled back right to 12.57, got us in there, and then I was looking for 2-to-1 on this, so 13.23 was what I was looking for. But what happened was that I noticed that this thing obviously was 1, 2, 3, 4 days up in a row, and we had sort of this channel, coming in on GE, right? See this channel up and down, up and down. So on Friday, it came to the top of that channel, and I waited. Okay, let's see if it can get above it. And I raised my stop, giving it the opportunity to get above it, but it couldn't get above it. So I got out of this at $12.94, made a little bit over 1R, and that's that, right? So that was the GE trade. I still like the stock. I think that GE still is a stock that can continue to go higher. So I want to buy it back. So if I get a pullback, right, back into 12.55, 12.60, I might be tempted to buy this thing back around 12.55, 12.60, put my stop originally where we had it, and then take it again, right, to the upside. So I'm probably going to look to get back in this next week. Keep an eye on it, right? But for now, we're out of this trade. I know a couple of you guys missed the trade because our entry was 12.57, and it literally came to 12.57, and then it bounced higher. So I know that most of people got it, but I know a couple of people didn't get it at 12.57. So here's one thing to keep in mind, right? If you don't get 12.57, it's okay to get 12.58, right? Like 1 cent is not really going to mean that much when we're looking for bigger moves, right? So my opinion, if I say something at 12.57, it's okay for you to put at 12.58, right? If I say get in something at $5, it's okay if you get in at 5.01 or 5.02 or 5.03, right? So I think some margin is okay, right? And the reason I say that is because, one trade that, doesn't get you in but works, right? Now you miss out on a profit. Now, one trade missing out is not a big deal. Like if you miss it, you miss it. It happens. It happens to all of us, right? Happens to everybody. It's okay if you miss one trade, because in a period of a year, one trade is not really going to make a difference, right? But again, if you have to give 1 or 2 cents above the entry, it's okay, right? It's not going to hurt the profit or the loss in that scenario. Because keep in mind, there's a lot of small money management firms, hedge funds, and all of that also, subscribe to this newsletter. So if I assume when I called at 12.57, everybody was buying it at 12.57 on that GE, right? And you look at this. That day's low is literally 12.57. It just couldn't get below that. So again, everybody was buying it over there, and GE did a nice move higher from there. So again, keep those things in mind. It's okay if you give it 1 cent above what I get in. It's okay. It's not a big deal, right? But again, so that's the GE. We got out of that one for a little profit there. And Tesla, man, I told you guys, right? I was 110% right on Tesla. I pretty much called the top on it. Unfortunately, I wasn't able to profit with the newsletter as much as I wanted because, the reason I canceled for the newsletter, by the way, if you remember, if you check out your email, I called it short at what, $900 and something, $925, $960? Somewhere over here is when I called it short. And look at that, dropped from $960 all the way down to almost like $600 and something. But the reason I canceled this for the newsletter is because I was like, well, wait, my stop loss is like $200-$300, right? So even if you sell short 1 share of this thing, right, you're risking like $200 or $300. Now for me, it's fine, but for most newer traders, even 1 share is hard to take based on your R unit, right? So that's why I was like, you know what, I'm gonna cancel this for the newsletter, keep everybody out of trouble. And I myself, lost some money on the Tesla trade, but then I did call options on it. So I was selling like call option, which is a different ball game, but I was shorting calls, and I made a good amount of money on Tesla on this drop day, which was nice. But again, pretty much called the top on it. It might make another attempt to go higher because sometimes these kind of things do that. They might try and make another attempt. But again, this is a good level to look for short opportunities. But for newer traders, don't worry about it, right? It's okay if you miss out on this trade. These are not the trades that are going to make your bread and butter trade. So just keep those things in mind. So again, News. Here's a spreadsheet. It's updated. We had a couple good trades. Like OPGN was a nice trade for us. Tiva was a really nice trade for us. We made 2-1 on the Tiva. Really nice trade for us on the TEVA, where we got in right over at $10.60. We got her at 12 something, so that was a good trade. By the way, this Tiva I think is going to go higher eventually, because the way it's consolidating. You see how it went to 12 instead of pulling back, it went sideways. So I think next week this is going to break out again and probably go to 13.50. So keep an eye on that. But we are out of this thing. And yeah, that was that. The most annoying trade, in my opinion, for me was this freaking Dish. What an annoying trade, right? I was so excited on this. We purchased this as a breakout trade. So we bought this as a breakout right above this nice base, right? Cannot get above it. Cannot get above it. Cannot get above it. Finally gets above it. We bought it. And boom, nice green candle. Looking great. We're up more than 1-1. Looking awesome, right? And the next day, just like boom, all the way back down and engulfs the whole candle. So good thing is we raised our stop loss all the way from here to all the way to the entry candles low, the entry green candles low, and we got our minor loss. Didn't even bother. I don't mind losing like a tiny bit, which is okay. But the annoying part is that it looked so good, but it didn't end up doing it. And now it's got earnings coming up, so I'm not going to trade this anymore. Done with the Dish. So that's that. Let's move on to our next trading opportunities that I'm watching for the following week. Now, annoying part is a lot of them are longs, and I just not feeling comfortable going too much long. But again, if there are setups out there, I'll take it. So one of them I'm watching is Gannett Co., which is GCI. Again, here's where you can see the symbol on my platform, GCI, right? So GCI, I'm watching this if it gets back above $6.61. So Thursday's high, if it can get back above 661, right, with a stop loss around like $6, I think this thing could try and make a move higher. So I do like this, but I want to see it get above 660 on this GCI. Another one I'm watching is Cloudflare, NET. So the reason I like it is obviously you can see how it did an IPO, and then it had a downtrend line, and now it's had an uptrend. So like a triangle pattern. It got above the triangle, pulled back to the triangle, and now we have a super nice base right over here. So this is one I'm definitely going to call. One second. I was going to call it, but it's got earnings on, it's got earnings on the 13th Feb, which is basically leaves us 3 days to trade it, right? Earnings is on 13th. So I do like this stock as a long above $18.50. I really like it. Yeah, but problem is we only have 3 days to hold it because it's got earnings coming up. So, I'll think about that, but that's a good one I'm watching. GCI I already talked about. Another one is Work. This one I'm definitely going to call. It's Slack Technologies. So look at this. It did an IPO, and since it did an IPO, it's only been going down. But recently, it broke the downtrend line, and instead of going down, it's going sideways, right? See that? So if anybody's taken the PTS course, we call this a transition, right? Phase 4 downtrend, phase 1 sideways trend. So I think if it gets back above this base, it's probably going to start a up move, right? So I kind of like this stock. Again, we have plenty of time because the earnings are in April. So I think I'm definitely going to do this long over 23.50, right? So let's say 23.60. I'm going to say 23.60 with a stop loss under 22.50. And we're going to look for somewhere around the $26 area as a target. So I really like this Slack Work, WORK. So I'm going to call this. Another one I'm looking to call, I already called this over $4.06. I'm actually going to change it, right? So I'm going to change it to be a long over $3.90, right? Actually $4. So $4 we're going to do a long. Stop loss is going to be the same. And this is a very different kind of a trade, but you can see here on the same stock, been going down, sideways now. And it's got like a nice kind of a rounding, I guess, inverse head and shoulders, you can call it, like inverse head and shoulders pattern. You can call it a cup and handle pattern, whatever, right? So I think eventually the real move obviously is above 450. If it gets above 450, this thing can really, really push higher. But I think above $4, we could kind of sneak in a little bit early. And again, just from my few hedge fund people that I talk with, again, I usually will not trade these kind of trades, to be honest. And again, if you are one who is more risk averse, right? Meaning, again, as I said, you're in your 60s or 70s, maybe you don't want to take this trade. This is more for people who are more risk tolerant. Just in the people that I interact with, some of the hedge funds that I talk with, they've been buying the stock up a lot. So they've been buying the stock a lot, accumulating it for the last few months, and they expect some sort of news to come on this stock. So I said, I don't care. I don't blindly follow people, because they told me that they are expecting some news to come out on this, somewhere around here. But I was like, well, there's no pattern. I'm not going to touch it. Doesn't mean, whatever people think. There's no pattern, so I'm not going to buy it. So I watched it. But now eventually we do have a pattern, right? It got above the 200 MA, pulled back to it. So if it gets back above 4, then I think it could really start moving higher. So I wanna just kind of piggyback on that above $4. So I'm watching this stock over 4. All right. So that's the one. And let's see what else we got. Another one I'm watching is VSTM, Versteam. So again, a beaten down stock going down sideways. Recently got a nice move up. And I think if it gets back above 220, right over here, if it gets back above there, I think it could probably make another attempt towards 3. So that's another one I'm going to be watching. One I'm watching on the short side, which is a little bit counter trend, is XLRN, Acceleron Pharma. Recently, this stock went crazy, almost doubled, more than tripled actually, from $35 to like $90. So now I think that if it can get back below, $90, then I think we might see a pullback on this stock. So this is going to be like a short watch for me. Another one I'm watching on the long side is MXIM. So if you look at this daily chart, it looks sloppy. It looks like a mess, right? And it is a mess. But when I go zoom out and go to the monthly chart, look what we're seeing, right? We're seeing a nice, sloppy, but nice little base here that if it gets back above here, this could go on another run. So I'm going to call this long. But again, it has to do a lot of work. It has to come back above 65, 64.70, right? And then I'm going to look to do it long on MXIM. This one I'm probably not going to call in this week's newsletter because it has a lot of work to do, and I want to find a tighter stop. So this one probably not going to be in the newsletter, but I'm definitely watching. Another one I really like is RAD. This one I'm definitely going to call Rite Aid. So you see how Rite Aid recently went from like $7, like 24, from 24 came back to like 11, and now it's starting to kind of round its way back up. So I actually like this stock as a long above 1325, right? 1325. Let's go to 65-minute chart. Let's see. So yeah, it has to get above 1345. So let's just say 1345. So 1345 gets above it. I think it could probably make another attempt to go higher. So 1345 is where I'm going to look to buy this thing on Monday. One I liked on the short side, but I think I kind of missed the entry on it, was CDW. I was actually going to call it on Friday, on Thursday actually, just short under this low. It dropped a little bit. I'll keep an eye on it. I don't want to get into this thing right now. I think if it gets another bounce here, and then I can be okay with shorting it. I think this stock is eventually going to go down to like 120, but I need to find a better entry, and this is not a good entry. So I'm going to wait on this one. PSNL, another stock, as you guys know, I've been watching this. I want to buy this, but it needs to get above $11.50. So again, it's got work to do. So probably not going to be in this week's newsletter, but a watch nonetheless. And Urban, you guys know Urban. I've been watching this short for so long, and I traded this once and I stopped out on it. I'm watching it again because I still believe in this stock to potentially go lower. We had an uptrend line, and we broke it. So I think if it gets back below this area with a stop loss over here, I think you could get a move down on Urban. So definitely going to be in the newsletter for today. Another stock I've been watching is Tiger, TIGR. Again, recently broke its downtrend line, popped up on nice volume, and now it's setting up another pattern to be long above Thursday's high. Right? If it gets back up with Thursday's high, I think it could go back up to like $4 or $5, $4.50, $4.80. So Tiger is another one I'm watching long. Another one I'm watching along is CPA, and you guys already know it. I had this in a few weeks before his newsletter, but then I canceled that trade. I think I'm going to call it finally now above 236. So 236 with a stop loss at like $1.88, and I think it might try and go to like 3 or 350. So this is going to be in the newsletter for sure. Another one I'm watching is UFPI, but it's got earnings coming up on 19th Feb, which is fine. We got 9 days to trade it. 9 days to trade it. I like at least 1 or 2 weeks to 2 weeks to trade it. This one again, it's got a weekly chart buy setup. So you see on the weekly chart, strong move up, pull back to the moving average. and I think if it gets back above the $50 area, I think this could go to like 55. So I do like it. We'll see if I could feel good about it or not. Another one, OPGN. So this is one we already traded on the 3rd Feb, and surprisingly, we hit the target on the same day, right? So we bought this stock at like $1.86, and we got out at like $2.82, which is literally the high of that day. And again, don't be surprised when I call stuff that's the high of the day or the low of the day. Same thing, right? We got out at 282, and that was pretty much the high of the day. Is because, again, if the hedge funds and stuff are selling, it kind of knocks it back down. But now it's setting up another pattern, right? You go to a 65-minute chart, you will see here it's kind of coming back up. So I'm going to buy this back above, let's see, $1.92, right? So I think it gets back over $1.92. I'm going to probably buy it back, and I think it could go back to like $3. So definitely watching this OPGN. Probably going to call it. Another one I'm watching, APTX, right? Again, APTX. Look. I think you guys see the theme of what I'm trading, right? I'm trading stuff that's been dead in like 2019 and 18, going sideways. Finally, looks like it might be coming back up. So I call this the resurgence, right? Stocks that have been dead and suddenly they find life, right? Resurgence pattern. So I think it gets back above $4.25 with the stop loss down here. I think it could try and make another resurgence attempt to go back up again. So another one I'm keeping an eye on. ADPT. This is one I was actually going to call on Friday above $31, but I totally missed the entry. Because honestly, I didn't miss the entry. I just didn't feel comfortable because you already have 2 longs in our portfolio. I didn't feel like adding too many at that time, and I still don't really. But this one was nice over 31. It already moved to like 33 on Friday. We'll see. Maybe the only way I would buy this thing again is if it does like a pullback, and then I could be like, okay, let's get back in it, or even above resistance after a pullback. So not going to be in the newsletter, but a stock I'm watching. Here's one I was watching for a short idea, but it already gapped down on Friday, and it already moved down on Friday. So now I can't call it, but I was looking at to call XLNX short, but it's already did its thing. Here's a penny stock on a long side I like. Again, notice the theme. Stock's been dead, going sideways, finding its resurgence. So I like this stock long. I mean, you could sneak into this long above $1.10, but the real entry would be above $1.35. That's the real resistance. But I'm going to actually sneak in early on this, like $1.10 entry with a tight stop at like 90 cents. So in the target, we could look for like $2.30. So again, I'm going to keep an eye on this AIM Immunotech. And the reason I'm doing these kind of stocks right now is because these are the typical bread and butter trades I do in January, February, March. I still do them later in the year, but typically in the first 3 months of a year, right? I like to do these patterns on stocks that have been dead. They go sideways, right? And they're showing signs of life. Because what happens is, let's say hedge funds were like, this stock is junk. And 2020 comes in, they're like, you know what, this stock is kind of undervalued. And they start going back up into these stocks, right? And again, we also have this coronavirus and all these things going. So these little immunotech, biotech stocks, they do tend to find some life duringly. So that's, typical bread and butter stuff I do every year. So doing it again. So that's that. So again, what are going to be the official trades? I'm going to call GCI if it gets back above there. I'm also going to call net because we do have 3 days, but we can probably get a 1 or 2 day nice bounce. I'll do that. Work I'm going to call, so that's 3. MBIO, that's 4. VSTM, that's 5. Okay. XLR, I'm not going to call, so I'm going to leave that for now. MXM, I'm also not going to call, leave that for now. RAD, I'm going to call. CDW, I'm going to leave alone for now. PSNL, I will leave alone for now. Urban, I will call. Tiger, I will call. CPA, I will call. UFPI, I will call. OPGN, I'll call. APTX, I'll call all of these, right? And the reason, again, people don't be concerned. Oh my God, there's too many trades. Blah blah blah. Don't matter. Remember last time I called like 30 trades, and only 2 or 3 of them actually ended up triggering. So because when I'm calling a trade, doesn't mean I'm calling buy right now, right? I'm saying if it gets above there, right? So I'm saying GCI, right? For example, I'm saying, hey, we're not going to buy it unless it comes back above it. So Monday, if it goes lower, then guess what? This trade gets canceled, right? NET, I'm saying, hey, we're gonna look to buy it, but it needs to get above 1850. If it doesn't get above 1850, then we're not gonna get in it. So a lot of these trades are trades that might not even trigger, right? It has to prove itself before it actually triggers. So, you know, those are the ones that I'm going to call. And we only have 2 open positions right now. We're going to stick with those 2 open positions. Our stop loss is already up, so we can't lose on this trade, which is the best part. Worst case, you make a little bit of money. So that's that. Quick little update on gold. What's gold doing? So again, pretty much we talked about it, right? After that breakout on gold, we've just been going sideways. And I do want to see a pullback in gold. I don't know if we're going to get it or not, but I want to see a pullback in gold. And that pullback could actually be buyable. But until it pulls back, it can go higher. I don't care. It's going to go higher without me. So bonds. I want to re-enter the bonds, TLT. So if you remember in the newsletter, we bought it right over here, breakout above this wedge pattern, and we took our profits like right over there. It pulled back. I should have actually bought that pullback. I didn't. But now I think I can buy it back above 146 with a stop loss under 142. And I think it's going to make a new high into like 150. So I really like these bonds to go higher. Check out the higher time frame. Yep, these bonds do look like they want to continue higher. But so I think I'm going to probably call these bonds as well. And the reason I like to call bonds is because if you notice, a lot of the trades I'm mentioning are longs, right? So we don't want to be like long everything and then the market craps out, right? So this is where bonds come in handy, is that the market starts coming down, right? These bonds are actually going to start going higher because people start putting money in safer investments. So definitely going to be keeping an eye on the bonds. As far as silver, I'm also watching silver because, silver has not run up like gold did, right? And I think this is still a sleeping commodity that everybody's sleeping on. And it's actually, in my opinion, in the next few years, actually going to be the winning commodity. So I'm watching this, I'm watching this for sure, like right over this little flag pattern, right? So we already had this little flag, right over here. Again, pardon my drawing skills. We broke out of that flag, pulled back to the flag. So now it's flagging again. So I think if it breaks out above this flag, I think it's going to continue higher. So I'm definitely watching it above like $17 on the silver SLV ETF. Remember the other ETF I called a while ago, which I ended up canceling? Damn it, look at that. Ugh. So I had actually called this trade. Remember this EUO? This was in the newsletter a few weeks ago as a little flag type of pattern. But when I called it, the trade was already, I think, somewhere over high up here. And I said, hey, let's look to buy it at like 27.50 or 27.45 in case it pulls back. And look what it did. I canceled the trade. It pulled back right into our entry and boom, new high. Oh, classic technical analysis, right? When support resistance is broken, right? So this is resistance. Resistance is broken. Resistance becomes support. And then boom, took off. So I wish I kept my order in, but I didn't. And there it goes without us. So the short on the euro. Beautiful move on that. So again, that's what I'm going to keep an eye on. As far as this week's concerned, what is the dollar up to? Dollar's obviously, as you can see here, just like coming all the way back up. Super strong dollar. But we do have to get a little bit concerned because, people look at this and like, oh, look at the dollar on fire. But I'm like, yes, it is on fire. You're right. But, it's coming. It's coming to a potential trend line here. Maybe another 2-3 days of upside. Then it hits this little trend line. And I want to see what happens there. Right? I want to see what happens there. If the dollar keeps going higher, then that's actually not good for the stock market. Why? Because, well, think about it. If the dollar gets expensive, right, then foreign people like, foreign money, right, people outside the U.S., European money, Chinese money, when they have to now, obviously, when they put their money in the stock market, they have to convert their money to dollar and then put it in the market. So when the dollar gets expensive, it's obviously not good for the stock market, right? Because then people start saying, you know what? Yes, that the fact that let's say stock market hasn't even gone up a little bit, but my dollar has gone up, right? So they start thinking about pulling their money out. So a weaker dollar is usually better for the stronger market because imagine if a dollar is now weak, people outside the U.S., they're like, you know what? Dollar's actually pretty cheap. U.S. market seems very tempting right now. So they put more money into the market when the dollar is weaker. So we got to watch the dollar. The dollar starts taking out these levels. Markets might weaken. But if the dollar starts pulling back here, then I think the market's going to continue to make new highs. So again, keep an eye on the dollar. But again, I'll walk you through it. You don't need to be that concerned about it. In the end, what really matters is what our stocks are doing and not what these currencies are up to. So that's something to keep an eye on as far as this week is concerned. The whole coronavirus thing, and doesn't really feel like the market really cares about it. And seems like China has have it under a decent amount of control. There's only been one, I think, death in the U.S. about it, and that person came from China. So there's no signs that the virus has actually spread in the U.S. Right? It's just people coming from China, and they've done a good job in quarantining that. So that's pretty good. The other thing, obviously, the impeachment. We already knew. I told you guys this like in the first edition of Newsletter in January that they can't impeach him. It's impossible. So because the numbers don't add up, right? Senate, it's all controlled by Republicans. They're always going to vote that way. So impeachment thing didn't really care about the market at all. Even with the election thing, now people already know Trump's going to win. Again, if you're a Democrat, apologize, but it's a fact. He will win. I can guarantee you that. I remember last 2016 election, I made a lot of money because there was a betting website in the UK that was taking bets on, which candidate is going to win. I bet like, I don't even bet that much. I bet like $1,000 that Trump's going to win. And I think I got like $30,000 in return because I bet on him during the primary where people didn't even think he was actually going to run. And I got good odds on it. I made like 30 grand on just betting $1,000. This time, however, he's the favorite, so there's no odds for that. But anyway, otherwise that could have been another swing trade. We could have called Trump long, right? But again, it doesn't really matter. I don't care about presidents. I hate all of them because none of them really actually have our best interests at heart. They're all the same, Democrat, Republican, any country's president. They're all the same, right? It's an ego thing. Nobody really cares. And that's why I don't really watch or keep up with politics because guess what? I'm going to take my trades, right? I got my financial future in my control. No president can dictate what I'm going to do. You know what I mean? So we're always the ones in control. So Democrats, Republicans, they're all the same. It's a big reality TV show, right? But nothing really matters. None of them impact our life in any way, shape, or form because we got our life in our control. And that's the thing to keep in mind. But again, this time Trump will win again. And I think with a much, much bigger margin the last time. If you guys bet, then that's the guy to bet on at this point. But again, it doesn't really matter, right? I don't really care about politics. They're all the same. Right now I'm in India. That's where I was born. So I'm here to meet my parents for a couple of weeks. I've been traveling a lot. This year I think I've been to Spain. I've been to Croatia. I went to Prague, Czech Republic, and I was in Florida, then Atlanta, then I was in Bangkok, then I was in Dubai. Now I'm in India because I grew up here. My parents are here, so I'm here to meet them for a little bit and attend one of my school friends' wedding. I'm going to be back in New York in about 3 weeks' time, I think. So back in New York, hometown, in New York in 3 weeks. I'll be there, and then it'll be fun. One quick thing I want to let you guys know is that we have our live event coming up, right? So we do once a year. We do a live mentorship event. So if you guys are actually serious about learning this and making this into a career, let me know. Drop me an email. So the live event is in May. Most likely it'll be May 16th, 17th, and 18th in San Diego. We haven't announced it yet, but I'm pretty sure it's going to be San Diego area, 16th, 17th, and 18th of May. It's going to be a live 3-day event, Saturday, Sunday, and then Monday. So Saturday and Sunday we'll be learning. We'll be teaching you everything, all the strategies, going over everything in detail. Right? Go through the whole manual, teach you everything. And then on Monday we're actually going to trade together. So you can watch me trade. I'll watch you trade. We'll sit next to each other and kind of trade together on Monday. So I'll be day trading as well as swing trading. So we'll day trade from there, and then we'll kind of help you develop your trading plan, turn it into a business. Right? Talk about anything you need to talk about. And yeah, I'll be there. Jared will be there. And last mentorship was amazing. Last one we did in New York. This one's in California. So drop me an email if you're interested. And yeah, we'll go from there. So hope you guys enjoy. Take care. Have an awesome weekend. And those in the trading room, I'll see you in the morning on Monday. And otherwise, those in the newsletter, check out below for the trade numbers for all the trades that I'm calling. Make sure to set your orders on your platform. And you can do it overnight, so you don't need to wait for the market to actually open. You can go to your brokerage account, set up all the orders that I specify, and the ones that trigger, ones that don't trigger, right? Just make sure you size your position accordingly, because what I don't want is like you take 2 positions and all your account's money is tied in 2 positions. Then you can't take more trades. So split your account, split the positions evenly, right? So make sure you use lower risk amount. so that you can actually take a few of these trades if you're following along. Because not everybody in the newsletter is a follower, right? Some people I know do it for following, which is totally fine. That's what I designed it really for. But also some people want to learn. So some people are swing traders in the newsletter. They swing trade on their own. They just use me as idea. They're like, you know what? I don't like that GCI idea that Anmol called, but you know what? I like that work idea Anmol called. So they'll pick and choose, and that's fine too. If you're an experienced swing trader, you can pick and choose the ones you like. You know, if you're a hedge fund, you're listening to my newsletter. Again, hedge funds also pick and choose. They don't get every single trade I call. So they'll do. They probably the hedge funds that I follow the newsletter. They might not take the penny stocks, right? But they'll trade like GE and stuff like that. So again, you can do your own thing. You're good, right? And those who are simply making falling for returns, then my suggestion is try to get follow as many as you can. If you pay 1 cent more than I did, it's okay, right? If you're really following, because you shouldn't really be missing trades. That's the key. So that would be my suggestion. And risk only a small portion of your account, so you can actually take a few of these trades. Because what I don't want is you take 2 or 3, and then let's say those are the ones that don't work, right? And the ones that work, you didn't take them. So again, be cautious of that. I want everybody to do well. And on that note, I will see you guys in the next edition of newsletter. Throughout the week, I'll send you updates. Again, please send me suggestions, right? Because I'm a trader first. You know, I'm running this service as just like it's a passion project to teach and also show other people what I do for a living. I've been doing it for many, many years, but I want your feedback. So let me know, right? Was there something you'd like to see change perhaps in the video or the way I do the video? Is there something you'd like to see change on the spreadsheet? Is there something you'd like to see changed on the email format, right? Drop me an email. I'm happy to hear all suggestions. Again, I can't promise I'm going to listen to all of them. I will listen to all of them, and I'll see which one makes more sense, and I'll try and incorporate that to the part of the newsletter. So enjoy, everybody. Have a good weekend, and talk to you guys in the next edition of the newsletter.